Hey guys, welcome to the channel. I'm Sheen, your host. This is Money Matters. Today I'm going to update you on my public portfolio. It's my portfolio that I share openly with you guys. It's been probably a month since I updated everybody on my portfolio. A lot has happened in the last month. The stock market is basically going crazy, just going up and up. The S&P is, I believe, only down, I think, 10%. NASDAQ is actually up, I think, 1 or 2% for the year, considering everything that has been happening. Whole economies have been shut down, and the NASDAQ is actually up for the year. So that's just incredible. The stock market is making no sense now. So like I said, a lot has happened in the past month. I got a lot of new subscribers, and so I'm going to update everybody on my portfolio. Again, this is my way of being transparent about everything that I do. So what I do talk about, a lot of things that I do talk about, I do put into practice, and again, just my way of showing some transparency and keeping you guys updated on my portfolio. If you like what I'm doing, guys, please give me a thumbs up. It really helps out the channel, really pushes the YouTube algorithm, spreads my channel to other people, helps me grow the channel. Also, consider subscribing if you haven't yet already. Check out my other videos. I do a lot of videos about money, finance, how to grow your money, how to invest your money, how to make money work hard for you. With that said, also consider signing up for Robinhood or WeBull. Links in the description below. You'll get free stocks for signing up using my link. I also have links down there to help support the channel. You can consider signing up for Cash App. You'll get $5 for signing up with Cash App. If you make a transaction with Cash App, you'll get $5 and I'll get $5. So if you want to support the channel, please check that out. All right, let's get started. So I'm just going to go over pretty much my cost basis, how much I'm up on these positions. I'm not going to talk too much about the company. That's just going to take too long. I'm just going to go quick and dirty about the cost basis and just briefly about what each company is. So here we go. First one, we're going from biggest losers to biggest winners. First one is Planet 13 Holdings. I have a cost basis of $1.94 on this. I am currently down 44.85%. So Planet 13 Holdings, basically they deal in legalized MJ. They sell products, MJ products. They have a big complex in Las Vegas. They're also considering about opening more complexes, one in Southern California. And again, so they basically sell MJ. They're a huge entertainment complex, and that's what they are. Next one is CCL, good old Carnival Cruise Lines. If it wasn't for Carnival Cruise Lines, my portfolio would be up probably 15-20% today. But CCL has basically taken my portfolio down to where it is now. So CCL, I have a cost basis of $23.16. I am down roughly 43% on this. I have $2,544 in CCL in this portfolio. Basically, CCL is probably taken one of the biggest hits. The whole, airline industry, travel industry, cruise industry, probably the biggest hit players with this whole illness-19 situation. It is what it is, I do see them making it to the other end, so I'm going to stick with them. At least if they double their price now, they're at a share price of $13.19. So roughly if they double from here, I will break even. I'm actually pretty happy about my cost basis at $23.16. I was buying them in the upper 30s, so I was able to bring that down. So pretty happy about that cost basis. Next one is NAT, Nordic American Tankers. I have a cost basis of $5.81 and I'm down 15.85% currently. Basically, the whole FOMO happened with NAT. The stock price shot up to $9, and I didn't want any part of that FOMO, so I just waited for the price to go back down. I picked up my initial shares at I believe about $6. When it shot up to $9, $7, $8, $9, I had no interest in it. When it dropped back down to $5 and $4 and change, I picked up some more shares, and so that's why I have a cost basis of about $5.81. I'm only going to put $300 in this. I'm not comfortable dealing with stocks that also deal in commodities, and basically NAT deals in transportation of oil, definitely a commodity. So I'm not going to put more money into this, but NAT, they're making money hand over fist. There's a lot of oil that needs to be stored, and so that's what NAT is. Next one is STM Microelectronics. I have cost basis of $25.64. I am currently down 2.69% on this. STM is a semiconductor company. They make semiconductor chips for a lot of electronic devices. They're also in the 5G space. They're not a big 5G player, but they do make 5G chips. So I have two stocks in the 5G space. The next one is Skyworks. Skyworks is a bigger player in the 5G space. I have a cost basis of $104.30. I'm currently up 3.7% on Skyworks. And so Skyworks, like I said, is definitely a bigger 5G player. And so 5G is going to basically take over 4G. Every single smartphone is going to be 5G. The opportunities for 5G is definitely bigger than 4G. There's a lot of more components that go into a 5G phone, so the revenue is going to be bigger. The profit margin is going to be bigger. Also, the way I see it is the next 3 to 5 years, nearly 75, maybe 80% of all vehicles are going to be internet connected devices. They're going to be connected to the internet, and they're going to be connected via a 5G connection. It's going to need a 5G connection to do a lot of the stuff for self-driving, for communication with other cars, uploading things to back to the manufacturer for new updates, new downloads. All that kind of stuff is going to require a 5G connection. And so the opportunity for 5G players in that space is going to be enormous. Smartphones, obviously, but also cars in the future. So that's what Skyworks and STM is all about. Next one is Uber. Uber, I have cost basis of $30.29. I am currently up 6.95%. Uber is Uber, basically the biggest player in the United States when it comes to ride sharing. They're the second biggest player when it comes to food delivery. So they're also considering buying Grubhub. And so if they do acquire Grubhub, they're going to be the biggest player in food delivery. Food delivery with this whole illness 19 situation is going to skyrocket. It's already skyrocketing. People that haven't done food delivery are doing food delivery. Restaurants that never did it have to do it, just to stay alive. And so when people are hooked on this food delivery, it's not something that they're going to just give up. Once you are in, you're pretty much in for good. You're maybe not going to order as much as you do now, but you're going to consider ordering food in the future. And restaurants that didn't do it, they're doing it now, and it's not something that they're going to stop doing because there's just another revenue stream that they didn't have before. So definitely Uber is a player to look out for. They are going to be number one in possibly the food delivery space, like I said, and they're already number one in the rideshare space. So that's what Uber is about. Next one is Starbucks. Starbucks, I just have one share at $69.20, currently up 7.44%. I had some extra money laying around at that time, and I just decided to pick up one share of Starbucks, so that's what that is about. Next one is 3M. I picked up 3M starting during this whole illness 19 situation. 3M makes N95 masks. There's a huge shortage of N95 masks, so basically it was a no-brainer for me. 3M, their stock price was down even before this whole illness 19 situation happened. They were not meeting numbers, so their stock price went down even before this. So it was just a good company at a lower price, and the whole illness 19 situation happened, and it brought their price even lower. And so to me, it was just a no-brainer. They're going to make money. They're going to make revenue. So that's what 3M is about. I have a cost basis of $125.57, and I'm currently up 12.7% on 3M. Next one is USO. I have a cost basis of $18, currently up 16.5%. USO is a oil ETF. They basically buy oil contracts. They buy oil contracts for cheap. They buy currently, and then when the date approaches, then they sell the oil contracts at a profit. That's what all they do. So as long as oil keeps on going up, which I do think oil is at a rock bottom, it's pretty much only going to go up, in my opinion. So as the economy opens up, as people start using more oil, people start traveling more, oil prices are eventually going to go up. As long as oil prices go up, USO is going to make revenue, make profits. So that's what USO is about. Next one is Revolve. Cost basis of $11.30. I am currently up 28.19% on Revolve. Revolve is a women's fashion company. They do all of their marketing on the internet with social influencers, basically on Instagram. They don't do any ads. They don't do commercials, magazines. They don't do any of that. Everything is done through their social influencers, and I think this is just the next generation of people buying clothes. It's all going to be through social influencing. And also they target a higher demographic, basically mid to upper end of the spectrum as far as women's clothing is. So that's what Revolve is about. Also, they're going to be reporting earnings, I believe, tomorrow or in the next few days. I think it's tomorrow. So it's looking like they're going to beat their numbers. So Revolve stock has been on the uptrend recently. Next one is Tesla. What can I say? little Tesla, big Tesla bull here. I have a cost basis of $515 on this account, and that is up 57.12%. You know, Tesla's the biggest player when it comes to EVs. They have the best batteries. That's just not up for debate. They're going to be first to autonomy, self-driving. They have the data lead. You know, I made a lot of videos about Tesla. That's what Tesla's all about. I do see Tesla breaking $1,000. That's my prediction. As long as the stock market does not crash, I do see them again breaking $1,000 when they talk about their battery on battery day, when they explain what they're going to do to ramp up battery production. I think that news is going to skyrocket Tesla's share to $1,000 and beyond. Next one is e.l.f. e.l.f. Cosmetics. I have a cost basis of $8.75, and this is my biggest winner at 58.51%. So e.l.f. is a cosmetics company. They make good cosmetics at a pretty cheap price. So e.l.f. traditionally has been doing good, and it's performing well right now. So that's my biggest winner, 58.51% on e.l.f. And so my whole portfolio is up roughly 8%. And you know, it's pretty decent because last month this portfolio was down 10%. And so in 1 month now I'm up 8%. Actually today was a down day for the market. So in the morning this portfolio was up 10%. By midday currently it is down 8%. Sorry, or down 2% from that. So the portfolio is at 8%. Alright guys, that's my video. Consider subscribing if you haven't yet already. Give me a thumbs up, really helps out the channel. Pushes my channel to other people, helps me grow the channel. I have over 100 subscribers now. I thank each and every one of you. Pushing on 200 subscribers, so hopefully in the next couple of weeks. Check out my other videos, and I'll catch you in the next one. Peace.